Hello everyone, welcome back to Payroll question time for May. I'm just going to give it a few more seconds, let everyone register, and we'll jump into today's content. But great to welcome you all back once again. Of course, if you have any questions during the course of the webinar, do put them in the chat box. We'll try and get through to as many of those as possible. And while we're waiting for a few seconds, if you've got any burning questions you want us to consider, why not put them down now, and then we can try and build them into the webinar as we go. So anything that's really pressing on your mind from a payroll perspective, put it in the question box and we'll try and get to that. We're going to give it another 30 seconds or so, and then we're going to jump in just to the full content. We've got some housekeeping rules and bits and pieces, and to welcome all of our panelists. I'm just going to give it a couple more seconds. People jumping in now. I love things about webinars. People always come in just after it starts. There's a whole new way of doing meetings, isn't it? There's the old going into the meetings where we all get there 15 minutes early, to webinars where we all jump in for the next sort of 50 seconds after they start. So the numbers are flying up now, which is great.
I think it's called being fashionably late, Nick. So I think we all like
the new world of work, Samantha. This is what we're into now. It's all tech and moving fast. We've got about 80 in, so let's make a quick start because we've got a bit of housekeeping rules to get through with anyway as we start. So hello and welcome back, I should say, to Payroll Question Time for the May's edition. We've got a new guest on today's show. I'm going to get into introducing all the panel in just a minute, but we've got some great conversations ahead of us. We know it's a really busy time for the payroll profession at the minute, so let's jump straight into the nitty-gritty. Remember, once again, we want you all helping us to shape these conversations. If you've got any questions at all, put them in the question box. I will be looking at those as we go. We'll do our best to answer those as we go through the course of this webinar as well. And of course, if we don't get through them all today, don't worry, our experts will answer them in a document transcript, which we will send through a little bit later. So onto a bit of housekeeping. First, I mentioned the questions, but we're going to be doing some polls as well. We're really, really keen to get your thoughts and opinions. We're going to be asking for our expert panel to comment on those as we go through as well. So please do take part. We'll try and be really interesting to see the results of those. We are, of course, recording this session. We will send you the slides as well and the recording after this session is over. And actually, we'll also be publishing this as a payroll podcast as well. So if you've got a burning question and you want it live on the airways for others to listen to, now's the time to put it in the question box. We'll also be sending you a survey at the end of this webinar, which is an opportunity for all of you to let us know what you'd like us to discuss on the next payroll question time. So please do take that opportunity to let us know what you want us to be talking about. And last but not least, I need to read out our legal disclaimer, which just says that this presentation does not provide definitive answers to individual queries, and in some places takes views on matters which are uncertain. It is not intended to be relied upon in any specific context or as a substitute for seeking advice, legal or otherwise, on a specific circumstance, as each case may be different. Now, for those who don't know me, my name is Nick Day. I'm host of the Payroll podcast. If you haven't checked it out yet, please do so, because this content will be featured on a later episode. I'm also a Reward 300 member, and I'm founder of JGA Recruitment, which is a specialist payroll recruitment company. But that's enough about me, because our panel is much more fantastic than I am. So let's do some quick introductions. Simon, let's start with you. Tell us a little bit about who you are and your background in payroll.
Okay, Simon Parsons. I work for Worx. I'm the UK Director of Compliance Strategies. I look after relationships with government and the solution developments as they come through with all the annual changes we get. Really late at the moment, but ensure that they get in. I'm also part of Reward 300.
Super. And we've got our new guest, of course, John Dorney. So, John, tell us about yourself.
Thanks, Nick. Hello, everybody. My name's John Dorney. I'm a director in the employment team at DWF, and I work with John Keeble. I'm here today, obviously, to field some of the employment and HR queries, but mainly I also specialise in immigration. And DWF is a Tier 1 Legal 500 rated firm for that. And I personally, surprising to me, I'm also Tier 1 rated. So I'm going to do some sort of stuff on immigration. That's me.
Super. And on my side, I've got Samantha to your left. So Samantha.
Hello, I'm Samantha Mann, and I'm the payroll training consultant at Armstrong Watson LLP. I've been there since January. Prior to that, I worked in the policy team. Like Simon, I've also been in the payroll profession for a very long time. And so I've probably dipped my toes in pretty much most subject areas: training, consultancy, policy work, payroll, in-house payroll bureau, and I love nothing more than talking payroll. Thank you for joining us today.
Superstar. And in clockwork fashion, I've got John just below you. So second John on the panel. John.
Good afternoon, Nick. Good afternoon, everyone. My name's John Keeble. I'm a partner in the employment team at DWF, and I've been doing this for just shy of 30 years now. And in terms of what I specialise, it's really all things employment, but generally with a particular focus on the more atypical employment relationships, the IR35s, the agency workers, the consultants. So that's my particular niche.
Super. And to your right, we have Lou.
Hi, everybody. My name's Lou Gray. I'm head of transitions and operations for EY Absolute and managed finance services, and I'm based in Belfast. I have over 30 years payroll experience, 20 in government, but the last 6 have been part of a managed payroll bureau. And I also am a member recently nominated onto the CIPP board.
Fantastic. And by last but no means least, to your right, we have Andy.
Hi, I'm Andy Nicholas from the Pensions Regulator. My background's all payroll, being with the regulator now about 9 years, working in the Automatic Enrolment Directorate, part of the compliance enforcement team. But my role is more about education, particularly focused on payroll and helping payroll software providers build systems that do AE well. That's my role.
Fantastic. Well, I'm delighted to say we've already got some questions coming in. I have seen them. We will get to some of those during the course of this webinar. So thank you, Karen and Catherine, for putting those in early. Today's topics, we're going to start with the EU settlement scheme, the right to work, moving on to IR35 and finding out how people are settling in. Then pay on demand, which I know is a hot topic for many, many payroll professionals out there at the moment. We're going to talk about some of the implications of pay on demand, the gender and ethnicity pay gap, the Alabaster ruling and Brexit and the implications, and of course, hot topics of the day. We're going to be talking a little bit about CGRS in there as well. And I mentioned that because one of our early questions from Karen is very much on that subject. Before we dive into the EU settlement scheme, though, let's start with a quick temperature check poll. I want to get everyone who's on this webinar involved as early as we can. So we're going to ask, what is challenging you the most this month? Is it CGRS claims and increased focus on past CGRS claims, P11D and or PSA preparation, redundancy, recruitment and onboarding, off payroll working onboarding, or none of the above? Comment. Just wait for those results to come in. Just a moment. Now, you might feel that some of the topics from first glance seem a little bit HR focused, but we all agree on the panel here that payroll has never been aligned more with HR than it is right now, and it's incredibly important that relationship is stronger than ever. So we're really excited to talk about some of these subjects today, because every one of these subjects has a huge impact on the payroll profession as we try and raise its profile amongst the HR and finance counterparts out there. I think this is going to be a really important webinar, so I hope you will stay with us throughout, particularly as we get down to hot topics. We're going to be talking about CGRS at that stage as well. So I don't know if those results of that poll have come in. Here we go. Let's jump to Lou. What are your thoughts on this poll as we see the results coming in?
Well, definitely P11D and or the PSA preparation. P11Ds can be quite complex. From a managed payroll bureau point of view, we're dealing with clients who maybe don't fully understand, and it's about getting that information in a timely way, especially in the month of May, when you're looking to make sure that everybody has their P60s by the 31st of May. You're also trying to get the P11Ds for submission at the start of July. So I can understand that that would involve quite a bit of work.
Nice. I think it's quite interesting to see that CGRS claims isn't top of the list as well. We've been so heavily involved in talking about that now. It's quite nice to see that that's only challenging 11% of the poll responses, which I think is quite interesting. So yeah, really interesting poll results there. We're going to jump into the EU settlement scheme as well. And of course, we have a new guest today, John Dorney, who, as he mentioned, is a tier 1 rated specialist to talk us through this, which is really important because we know there are some offences involved if we get advice from someone who is not qualified. So great to have John on the webinar with us today. John, tell us a little bit about what's happening in relation to the EU settlement scheme, because I think from my perspective, and we talked about this off air, the Home Office guidance is a little bit limited. So what do employers need to do in preparation?
It is a little bit limited, and I don't want to go into too much detail, but I think it's important just to understand the background to it. You've got a date there, June the 30th. There's 48 or 47 days to go until the migrants have to register under the EU settlement scheme. And just for those who may not be so familiar with it, the EU settlement scheme came about following Brexit. Prior to Brexit, we were under European legislation. And European nationals would be able to live, work in the UK, but exercising treaty rights. And if they're living here for more than 5 years, they could get what permanent residence, the old European scheme. What happened was, as you might recall, on 31st January 2020, the UK left the Union, and then there was a transition period or implementation period when we decided to do, well, what's going to happen when free movement ends on the 1st of January. So the UK introduced the EU settlement scheme. It was started being trialled about the August 2019 through academia. And the long and the short is that individuals, European nationals and their European Economic Area nationals and their partners, it's mandatory, and this is the point I want to stress, it's mandatory, they have to register on the scheme by the 30th of June. The way the scheme works is it's an application. You can either use a smartphone to application, or if you haven't got a smartphone or you haven't got a biometric passport, you can do it by sort of normal paper applications. But the situation is that on the 30th of June, that every European national and their partners and their dependents must be under the scheme, because after the 1st of June, 31st June or 1st July, they will then be working unlawfully, or they won't have the permission to work in the UK. This then comes on to the right to work checks, and this is what's happening. Until 30th June, the right to work checks are as previously, and this used to be like a paper checking of the individual migrant's passport or their residency documents. From the 1st of July, the way it will work for new starters, and I would actually stress that as well, it's new starters. The check is done by an online check. So the Home Office's idea is that everybody will have registered on the scheme by the 30th of June. Therefore, when employers do an online check, they should be able to pop up on the picture of the individual migrant and take a picture or a PDF scan of that for their file. Of a scan for their file. But the main point. Sorry, do make promise lost train of thought. The point is that you have to be on the scheme registered by the 30th of June. What employers can do, what they can't do. Employers, I think Nick, you actually mentioned at the start, you can't actually provide any legal advice to migrants because to do so without being appropriately qualified is actually a criminal offence. But what you can do is you can point them to government gov.uk website, give them a steer on what to do, and let them know that the 30th of June they do have to regularise the position. In terms of the right to work checks, as I say, at the moment it's a paper check. The old rules are in place until the 30th of June. And so if you have got a European migrant or a European migrant family member coming to you now, you can do the checks previously by taking a copy of the document of the individual and recording it on file. The other thing, as I said before, is you don't have to repeat the checks. So if we have any European nationals who are already working for us, and we've done the right to work check already, then that's fine. You can forget about it. You don't need to do it again. It's only for those nationals who are coming in after the joining us after the 1st of July. The reason that the changes come about is, if you think about it, with Brexit happened at 11 o'clock, well, Brexit was in January, but the transition period, or the implementation period, ended at 11 p.m. on 31st December. So any European migrants who are in the UK exercising treaty rights or residents were sort of under the wire. But since then, you've got people who are coming in post-Brexit who won't be eligible to join the scheme and therefore won't have be under the settlement scheme. And those individuals have to demonstrate their right to work checks under the points-based system, same as you would with somebody under the old Tier 2 general file or general migrant visa or skilled worker visa, as it's now called. As I say, the employers, what you have to do is let people know about it, but there is no obligation on you to do anything to actually to assist or massively help them. The future issues that I can see is the way it works is when you apply for the EU settlement scheme, you either get two types of status. You either get pre-settlement status, you've been in the UK for less than 5 years, or 5 years, or you get residence, full resident status if you've been in the UK for 5 years or more. If you get the pre-settled status, then that will give you 5 years to stay in the UK. And during that time, once you get to 5 years, you can apply for settled status. And obviously, those who've got settled status will have it automatically. The issue that I see is I'm not sure that the Home Office has actually made it quite clear that this is a mandatory requirement, and also that this is the important thing, that all European nationals who are already here under free movement of workers rights and who already have got permanent residency under the old rules, they also have to get residency under the EU settlement scheme. If you have permanent residency as European national previously, that's great. You still got to get on the new scheme by the 30th of June. And that's the same for their dependents. And I'm not sure that's absolutely clear. The other issue that they have with the scheme is it's quite odd, because if you get the pre-settled status, which allows you to stay in the UK for 5 years and then go for settled status, you can actually leave the UK for up to 2 years and then still come back and carry on working. The problem is when you go for settled status, you can't have been out of the UK for more than 6 months in a 12-month period. So what could quite conceivably happen is you get people getting pre-settled status for 5 years. They leave the UK for over 6 months or 8 months, then come back. And then when they actually go for settled status at the 5-year period, they can't, because they can't satisfy the residency requirements. So that's one of the issues, I think, for the future. The Home Office have said that anybody who is late, because then people are saying there's going to be lots of people who are late in applying who don't realise that they could apply. They will give them as long as they've got a reasonable excuse, they will give them 28 days to make an application, and at which point they can get the residency. The issue is an important one, because if you employ somebody without them having the requisite permission to work in the UK, the starting point is £20,000 fine, and if you knowingly employ somebody who's got the right to work, it's unlimited fine, and the directors can go to prison for up to 5 years. So it is quite serious. On top of that, as most departments like to do these days, they like to name and shame. So you get your name put up on the Home Office's website saying culpable of unlawfully employing people, and also if you have a sponsorship license, which many employers are now getting because of Brexit, to be able to tap into the European labour market, you will lose your license. So it's actually quite serious consequences. But distilling it down, the EU settlement scheme is mandatory. All the EEA migrants and their partners and dependents need to register by the 30th of June, and their right to work checks from 1st of July will be either for those who got rights under the EU settlement scheme will be an online check, and for those who aren't here under the EU scheme but are here under some other visa permission will be the old right to work checks.
Super, and I think that hopefully answers the question we've had come in from Bab Dunseith, which says, is a question here, what do we need to do for onboarding staff remotely now? And obviously the new world of work is a lot of remote workers, for validating their right to work online. If we can't actually physically meet these individuals, can we do it via scanned passport, or what's the correct process we should be adopting in the new world of work?
That's a very good question, Nick. The situation was the way under old rules, the way we do it is we check the appropriate documents in the presence of the holder and certify as being a true copy. Because of COVID, the Home Office changed that and said that you could actually check as long as the individual scanned their documents to you, and you have like we do now, Teams or Skype or Zoom call, and you check your scanned copy against the migrant holding up their passport into the onto camera, that would count as an amended right to work check, which doesn't now actually need to be repeated when the migrant actually does start working physically in the premises. That was going to last until the 16th of May. The Home Office just announced it's been changed. Off the top of my head, I'm not sure. I think it's now extended to about the 15th of June or something like that. But the point is, you can do it remotely at the moment, and you need to check the gov.uk guidelines to see how long this arrangement is going to be extended till. It's not permanent. At the moment, you can. It's definitely until June.
Super. You must have to think it might have to become permanent at some point, though, if we continue with remote workers across the UK. You know, employing someone from Scotland to run a payroll in Suffolk, it's quite difficult to sometimes meet these individuals if it's 100% home based. So do you think this is likely to stay, or do you think it will revert back?
We're dealing with the Home Office, so no.
Yeah.
It's a little bit of computer says no. This is an accommodation, but as I say, the actual test at the moment, this is for migrants generally. As I say,
sure.
for European nationals, they should all be on the EU settlement scheme, so you can just check them online. All you need is that they can give you an access code and the date of birth, and we can check those, no problem. Anybody else, you do need to check the original documentation. As I say, there's a dispensation at the moment where you can check, you can have a scan and check it over Zoom. But you can also sort of, although people are reluctant to do it, you can pop them in the post. So again, if it was yourself, Nick, you could say, well, actually, I'm 200 miles away from John. It's a bit of an effort to get to see you. I can say, fine, but can you post me your original passport? And I can check it. The requirement is I have to check the original documents in the presence, and that includes video conferencing of the migrant.
Super. Well, I hope that answers your question as well, Babs. Let's have a quick poll on this then. Be interested to know from the people watching this how comfortable they are with the right to work checks and in terms of new joiners from July 2021. So let's answer the question: are we comfortable with these changes and what needs to be done? Do we know what the changes are that are coming? And are we waiting for further Home Office guidance? Were perhaps we unaware that any changes were coming at all? Or do you need further reminding, even following John's conversation there, what our right to work check is? So look at those results. Be interested to get your thoughts in particular, John, on these results as they come in.
I think my own view is I don't think it's been made as clear as it should be to employers of the changes coming, and the guidance hasn't. There's been some minor changes to guidance, it's not been categorically changed. But I think the main point is, I think if stress one point from my section is a lot of Europeans who already have permanent residence here and their family members, they may not be aware that just because they had it then, they don't still have to go on to sort of flip onto the EU settlement scheme. They'll be able to do it automatically, no problem, but they must register under the scheme.
Sure. I've got those poll results there. Good. Well, the good news is, following your great conversation there, John, as well, most people are comfortable, which is good news. Now, next subject, we're going to jump in a minute to R35. Before we get there, I just want to revert back to the original temperature check poll that we did, because Lou, you mentioned there's been some challenges with P11Ds and PSAs. We had a question come in at that time from Graham Burr. I just think it's relevant to keep it together before we jump on. Graham Burr asked, has there been any more push from HMRC to payroll all benefits instead of P11D statements?
I'm not aware of any update other than that one line. Was it even a line on the February bulletin that was released that took, well, it definitely took me by surprise, especially when Simon announced it, and about the effect that it does have, you know, as a payroll bureau, the impact that it had on so many of the clients. So there has been no follow-up, there's been no further information. It is down to a choice.
Super, fantastic. Well, let's jump in then to IR35. This is something that I'm quite interested in. One, because it impacts me as a recruiter quite heavily with the contractors we work in. But number two, because I'm a huge football fan, and there's been some pretty big news out there for those that haven't read it. John Keeble tell us about. It does involve a certain Gary Lineker. Can you give us a bit of an IR35 update here, John?
Well, I can do. First of all, I'll just express a slight residual concern that Gary's defamation lawyers are going to be in touch. Given in this slide, we've now outed him as the architect of many umbrella companies' fraud. But moving on to that and on to IR35, if you look at IR35 and enforcement, all of the high-profile cases recently have tended to be those in broadcasting. And if you're looking for the most high-risk occupation, to face some form of IR35 inquiry, it would be that. And Gary is now, as it's reported, facing a potential overall tax bill, I think just a shade under 5 million. About 3.6 of that relates to income tax, and the remainder in respect of NI. And I suppose it's part of a continuum of HMRC's focus in this sector. And it's probably fair to say that the outturn of that for HMRC has been a fairly mixed bag. So in terms of Paul Hawksby, TalkSport, I think they were successful in that one, and that was a tax liability of, I think, of around 140,000. There was Eamon Holmes, of course, who faced the same issues, and in terms of what his liability was, that's variously been reported between 250,000 and 2 million. And of course, Christina Ackroyd as well. But equally, HMRC hasn't been successful in a number of other cases, particularly Kay Adams at the BBC and Lorraine Kelly, who was facing a potential liability, I think, which was around 1.2 million pounds. And when you're looking at this particular area, when you look at these high-profile presenters, it really does turn on some fairly fine margins, generally looking at issues of control and mutuality of obligation. And if you put all of those, 5 or 6 decisions together and try to look at the clear distinctions between all of them, quite frankly, sometimes it's pretty difficult to see some clear blue lines and why it is that the tax tribunal has gone one way on one case and one way on another. But I suppose that the very nature of an IR35 inquiry is that it's very much fact specific, and whilst you can apply the general tests of employment whilst looking at it, all of them are somewhat different. But who knows with Gary, based on the previous decisions, quite frankly, it could go one way or another.
Excellent, fantastic. And from a payrolling perspective then, Simon, how have you seen things settling in? We're a few weeks in now. What's your experience been, and what's the feedback been that you've been hearing in the market?
In relation to IR35, I think there's still rumblings around, so I think people are starting to wake up. So many were prepared, there are others that weren't, and are just starting to realise that maybe they do have IR35 contractors to consider. And then we've got the more recent publications that have come out from HMRC, which talk about activity of umbrellas and the mucky umbrellas as well, if I call them that, in relation to fraud, which the BBC have been focusing on. So generally, I've got to say, payroll-wise, pretty good for those that know what it's about, but there's probably still a lot out there that don't know it actually impacts them.
I was just lost you there, Simon. Let's go way back. So Samantha, you were talking about there may be a requirement for additional payslip clarification in relation to R35. Can you talk to us a little bit more about that?
You've lost me there, Nick. Payslip clarification. Apologies. I'm sorry. I'm doing a John here. I'm having a moment. Sorry.
So that's all right. I think signal's going in and out slightly. Let me jump over then to Lou quickly, because Lou, you're a bit of an expert here because you've dealt with R35 in the public sector from before as well, right? So this is nothing new to you. How are you seeing the transition? How are you seeing, what observations are you making now that this is really impacting the private sector as well?
I mean, back many years ago when it came in to local government, and in particular the local council that I worked in, we had a very proactive director and finance team. So there was a thorough exercise to ensure that there were procedures put in place so that each month there was a review of, for example, the invoicing that was coming in. I think that's something that maybe now we're in May, you know, we're into our second month, that people maybe need to go back and evaluate and make sure that they do have those procedures in place, that there is a review of invoices. And it's not just about the payroll team. Obviously, the bottom line for payroll in IR35 is the responsibility to make those payments and to report via the RTI submissions, but it's a business as a whole. You know, each person who signs off an invoice has the responsibility to know and understand about that individual that they might be signing off some time for, to step back and think, should I be making that, making the teams aware that this person should actually be paid via the payroll rather than via a consultancy. And I think it's about the whole business looking at it. You know, May to me is going to be the month where, as Simon's already said, businesses will start to think, oh, we don't have a procedure in place, or oh, that person needs to quickly get online and get this resolved. You know, from a managed payroll point of view, we have had businesses come and they want us to go back and look and review over the last year what has happened in their business so that they are actually compliant with IR35 and to ensure that the records are correct.
And I imagine that's something that you've been, Samantha, because obviously you've got a lot of client payrolls from your side. So is that similar? Do you echo the similar thoughts to Lou?
Yeah, absolutely. Similar thoughts. Oddly enough, I was talking to colleagues about the very subject of payroll working reforms this morning, and I was asking those at the front line, you know, how is this impacting you? And I have to say the responses make me kind of mirror what Simon's already shared in terms of his concerns. I think there's a lot of clients who maybe haven't got the message because we're not seeing any from the client base that we would expect to see. Maybe some more additions to the payroll. We're not seeing them and identified as off payroll workers. So we were just actually discussing whether or not, you know, kind of a 10-20 minute webcast for clients just to remind them these are the rules, these are spread your tendrils around the business, make sure that you know who's providing services and in what format, and of course we go back to this, you know, potential risk of mucky umbrella companies, as Simon used, and a common question of course is, what is an umbrella company? And there are perfectly legitimate umbrella companies that are set up to support individuals who provide their services either through a limited company and who are looking for somebody to do the administration for them because they will process their payrolls, their payroll for pay-as-you-earn tax, essentially taking them on as an employee. But if you have an umbrella organisation, either because you're using their services or because you're considering using the services of an umbrella company, it's been aware if they're offering to save you taxes, have more in your pocket and less to the taxman, then be warned. The chances are that umbrella company is not operating legitimately, and you know, watch out for signs of that. That promise of saving significant taxes invariably fails to stand up under any investigation, and HMRC absolutely never justify, you know, never kind of rubber stamp any umbrella organisation. So if that statement is being made, you know, you need to be aware that they're likely not to be legitimate, and actually you risk then not only being given a big tax bill by HMRC at a later point because of non-compliance, not yours but theirs, but also potentially you end up in a situation where your taxes that are being made, deductions from your pay, aren't being paid over to HMRC, so you could end up with a double tax bill, and that's one of the big key risks that we need to get that message out there so that every taxpayer knows, and every individual knows.
I think that's really good advice.
Sorry, Nick. I think it's important just to point out, the government website has the 10 things about due diligence that you need to be aware of, and you know, it is a quick referral point for businesses. And also back to what we've said for the last year over the furlough claims, evidence everything. You need to have your evidence for the decisions that you're making and have that saved down, so that if you're asked questions, you're able to go back and say what you were referring to. Sorry, John.
Yes,
No,
because I'm thinking
a few points, if I can, Nick, just generally on IR35 and where we're at. I think I'd mirror points that other people have made, that there are still a lot of organisations that are still just waking up to it, and if they haven't properly due diligenced their supply chain. In terms of what I have seen as some broad themes, is that there are a significant number of organisations who just don't want to get engaged with the risk in it at all, and there are a fair amount who are insisting that there will be no PSCs in the supply chain at all. And additionally, where there is an assessment which is inside IR35, then there's a general movement towards agencies and potentially umbrellas. So, of course, not universal, and it's always difficult to extrapolate your own experience and generalise it across everything. But those are some of the themes that I've been seeing there.
Yeah, no, I'd agree. And I think to echo something Samantha said, it's worth, as an employer, being wary that the contractor may choose an umbrella company that works for them, but it's, you know, we've got an obligation to check that it's something, because it'll be us that the employer that gets hit with the tax bill if it's not right. Interestingly, as a recruiter, we've had a lot of contractors contact us about implications to going into different umbrellas offering different pension schemes. And there was, you know, we always talk about what they might earn from a day rate, but actually it's really impacted some of their pension contributions when they've had to go inside R35. What's been your experience, Andy, now that we're a little bit further ahead? What have been your observations?
I think the important thing is that the employer, when they realise they've got people that they're paying as contractors, so fee-based people, you know, invoices, etc., that they check. First of all, they should determine whether or not it's a personal service worker, so someone who would be automatically covered for pensions, as opposed to an IR35. So they've got to work it out. Is this person truly self-employed and therefore outside of automatic enrolment? Are they a personal service worker, so it looks like self-employed but aren't, and therefore covered for automatic enrolment? Or is it a limited company, etc.? And if it is truly IR35, then they won't be covered for automatic enrolment. But if it's paid for an umbrella company, then they are an employee normally of the umbrella company from our perspective, and we would expect them therefore to be automatically enrolled if they meet the criteria and pension contributions. And of course, the employer bit actually comes out of the fee that's being paid for their services, as well as the employer's national insurance and the fee for running the payroll. So it's quite a messy, interesting setup. What is qualifying earnings? What is pensionable? Needs to be clearly defined, I think.
Oh, well, I'm sure we'll be coming back to this subject in future PQTs. I'm going to jump over to our next subject area. It's something that, for me, I'm hearing loads about in the recruitment market. It's pay on demand. We want to talk a little bit today about the implications of pay on demand. And I'll start this off early because we've spoken a little bit off air. Not all of us come from the same viewpoint on pay on demand. So in terms of what do we think about it, but more importantly, we want to get to the nuts and bolts of the implications of it today. So I'm going to kick off. Let's kick off quickly, actually, with a poll before we get into this. I'll be interested to get a temperature check on how people are feeling about pay on demand in the market. So at the moment, with regards to pay on demand, do you already have it? Is it working well for your workforce? Something you don't have, but actually you've heard good things and you're looking into potentially bringing it in. Perhaps you've never looked at it, don't like it, or you've never approved a pay advance or loan request, or perhaps you've never even been asked for an advance or loan. It'd be interesting to see what the listeners and the viewers are feeling about this. And when we get those results, I'm probably going to jump it over to you, Simon, because I'd be interested to get your take on where we are from an implication perspective on pay on demand.
Okay, sure. On the survey, I imagine that most, I'm thinking that most won't be using them because it's very much a developing market.
Yeah.
Yeah, but certainly we know that lots of people are potentially looking in this area. And yeah, we can talk about, I guess one of the risk areas associated with this is that it's actually an unregulated market at the moment. So interesting times.
It touches on our first question that's already jumped in. I will come back to those poll results in just a second.
Yes.
Keep them on the screen if you can, Stephen. But
Yeah.
Jackie O'Gara's already jumped in with a question about how it's going to affect RTI submissions. Is it going to be a disguised remuneration for PAYE purposes? Will it affect universal credits and other bits as well? So I'm going to tackle all of that in this discussion, Jacqueline, I hope. But before we get there, interestingly, let's kick off with these poll results. So what are your thoughts on this then, Simon?
Yeah, they're exactly where I thought they'd be, actually. So yeah, the highest result on the no, and equally, I mean, you've got a 72% there where actually it's not really been a consideration. But however, it's developing, isn't it? So there's a 28% area of thinking, yeah, let's look at this. So interesting times.
I think when it comes to pay on demand, Samantha, let me take it to you. We all think we know what it is, but maybe it's worth having a conversation about what it is and what it isn't. So can you explore that area a little bit for our viewers?
Indeed, indeed. Pay on demand is considered in its ideal format. And I have to say to anybody who's joined us today, we were almost at odds. Well, almost at odds. We were at odds, almost at loggerheads on our early call this week in terms of those for and against it. So it's for employers who use it. And I'll be honest, 12% are currently using it and it works well. And I would love to hear the arguments for, because we do need balance in every discussion and debate. So I'd love to hear in the chat box what those ideas are for this. It's in its commonest form, it's seen as an addition to the benefits, the reward platform that an employer offers to their individuals, and it means that an individual can receive an amount of money, an advance. Simon would say it's a loan. I would say it's a pay advance in advance of payday, in advance of their pay, because they find themselves in a situation where they have that financial need. And a good employer will monitor the situation. So as not to, the idea is to replace these payday loans that charge horrendous amounts to individuals who really can't afford to pay those amounts and who find themselves in that terrible situation of spiraling debt. Quite often it's pay that has already been earned, so it might have been an overtime payment, for example, and the employee might be able to draw down on that amount, but they've already earned it in advance of payday. And then when it comes to payday, the ultimate reconciliation, i.e. it's repaid before they receive their net pay. It's very popular in the US, and I'm pleased to hear those questions being asked already by Nick about the implications for RTI, because this has always been my biggest concern. I remember when real-time information was being rolled out, one of the questions I often got asked was, well, can we pay rather than report on a monthly basis, because we pay our employees weekly, but we really don't want to pay for a monthly payroll service. So can we just give our employees kind of a bit of money each week and then kind of reconcile it at the end of the month? The very clear message from HMRC was no, you can't. And so my concern would be is if this were rolled out whole scale to employers in this country, I think we would see HMRC and the Department for Work and Pensions with a universal credit hat on, wanting to take a closer look as to whether or not actually they could benefit from this with more regular submissions when these payments were made down to the individuals. At the moment, there is no allocation of that. There's no recognition of that in the RTI process. So I think there's huge implications if this were to become a widespread, very popular kind of service that employees drew down on a regular basis. But I have to say, there are employers who that 12% already represents in terms of our poll findings, who do use it and they find it works well. And I've seen presentations from them and their employees who speak very highly of it, but they're well-managed schemes that don't run the risk of employees falling into a spiraling debt situation, which would be one of my key concerns on this, not just
Sure.
the long-term impact of real-time information and universal credits, but that continuing spiraling debt. Nobody wants to put their employees in that situation. So it's quite nice that from those poll results, a large 70-odd% already don't process or have never been asked for advances or loans. So it strikes me that that might not be the biggest long-term consideration, even though it's a hot topic in the clinic.
From my perspective as a recruiter, obviously we're always looking at things that attract staff and retain staff. So if I worked for Nick Day Pay on Demand Solutions, the kind of marketing I would be giving around the positives of this is we live in a streaming world, an on-demand world of Netflix and Ubers, and it's a natural evolution of the pay cycle to be on demand. This is the way the future of work is going. We know statistically that 66% of employees are relying on high cost credit, and many of those that take it out actually take it out knowing that they're already going to struggle with the repayments. We know that mental health is on the increase, and mental health has a huge connection to financial wellness. So I'd argue that sometimes access to pay on demand might help ease and give you more control over your finances to release some of those burdens. The suppliers out there that I've met, I've done a couple of podcasts with owners of different pay on demand solution program suppliers and solution providers, but they say that they don't offer, it's not a loan, they charge a per transaction fee, which is as little as sort of £1 per transaction. That's how they charge. So there is a charge applied to these solutions, but they'd argue it's not a loan. And there's different solutions coming out all the time. So I think there was a lot of positives from a recruiter perspective, from a retention point of view, from a financial wellness point of view. But let's flip to the other side. I'm not a legislative expert. So Simon, let's bring it back to you. What are your views on this as a solution, and whether or not it will be really adopted on a wide scale?
Sure. Well, the concept of pay on demand, I actually like very much. My view is that this isn't actually pay on demand at all. So the pay on demand I'm talking about is flexibility in actually having true wages, and flexibility on choice of when you want to be paid to meet your own chosen regularity. These pay on demand schemes are referred to as the FCA, as employer salary advance schemes. They don't fall within the credit law or the loan law, so they're unregulated. And they'd actually say that some of the fees charged actually place them higher than overdrafts from your bank and other facilities that are available, even from credit cards, because some of them are fairly low. So it's just be careful, because if you take out £10 and you charge £1, that is 10% for having that £10 for a week. So multiply that by 52 and you've just been charged 52%. So it's actually understanding some of those. But there are the other implications, and the others mentioned by the FCA, for the fact that they're potentially seeing an element of those that are dependent on getting money out early, which at a low rate, to then reach a point of the month where they need to go to a payday lender to make up the difference, because they don't have that money coming in anymore. And so it gets into that sort of spiral. But that's the element. And I think going back to the point of view of, actually, this isn't actually pay, it is an advance. It is a good facility for those who want to manage it and need emergency money that can't get that through other means. But if it's really wages on demand, then it would fall under the on or before principle of RTI. And so it's kind of, let's call it what it really is and not pretend it's something else. And if that works, fantastic. That's kind of where I come from a little bit, Nick. But as a capability, that's fine, but let's go with our eyes open, because we've also got to be careful, as the ESAS company is a partner of the employer. So will there potentially be challenges that the fees paid would reduce pay for national minimum wage purposes? Could it impact universal credit and RTI? And at the moment it's not. It's an unregulated credit capability, as stated by the FCA. They don't plan on bringing in regulation for it at this point because it's in its infancy. But it's just being careful with it and understanding what it really is. So sometimes they say you're getting your earned wages. You're not. You're getting a loan or a credit capability until you get your earned wages, and then you'll pay it back. If it's called that way, I think that's fine. And also, I think there's then, which Andy may be able to come into, actually, how does that sit with qualifying earnings for pension AE? If it's actually truly your wages on demand. And so it affects so many things. So the question is good, but at the moment, ESAS is not considered a payment of wages at all. It's actually a temporary credit facility until you get paid normally. Hopefully that helps a bit, but it's weighing up.
I've got a question for you, which I'm going to just reference early doors before we get there. So some of the average withdrawals on this basis, if you look at, I had a look at the different providers that I've spoken to on podcasts, and the average that the people have access to this, they're taking around about £70 a week in advance. Now, obviously, we don't know what they're earning, but that's an average amount. So not their full earnings, and often with these solutions, you can limit how much of your earnings you can take in advance as well. So there's lots of different things to consider if you are thinking about a pay on demand solution. But from a broader view, Lou, what I'd like to know is, I've asked Simon this before, which is why I'm not asking Simon deliberately this time. In the future, if this is going to be widely adopted, do you think this is the start of the dissolution of the monthly pay cycle as we know it? We've come to love the monthly pay cycle. We love the month, because that's when our mortgages come out, it's when our bills come out. But in the future, is this the beginning of the end of the monthly pay cycle as we know it?
At the moment, I don't believe it is. I'm not saying that there shouldn't and there could be more flexibility around when a payroll is ran. From my point of view, my personal opinion is, along with pay on demand, then to me, if that's seen as a reward and a benefit, we also then have to build in financial well-being for employees, so that they're educated and they know then how to better manage their money for the bills that they've agreed that they will pay. From my point of view as a payroller and as a payroll supervisor, over the decades, have I ended up with employees coming in and demanding that they need help, they don't have any money, they can't pay their bills. So if they couldn't manage on a weekly wage, which is still, there's still a lot of weekly paid employees. If they couldn't manage, where are we going to go with on-demand pay? And it's about, so I have no objection to people getting paid on demand, but to me, we need to do the bigger exercise, which is educate people on how to better manage their finances so that they can eventually get out of the spiral. Because I have been that payroll supervisor standing in a reception with, somebody distressed. I even have had somebody bring in their children to talk about they can't pay because they don't have any money, they don't have food. What am I going to do? And how can I get in advance? And whenever you start down the route of giving advances, how can that person always maybe get out of that trouble? It's very hard.
I think that's a really sensible and important point to raise. Financial wellness as a learning point is much, is ultimately really, really important to work alongside. So I think we've answered the questions that have come in during the course of that quick conversation. We had one from Tracy just come in saying, I thought the HMRC saw this as an interest-free loan, which they don't recommend. I think that's probably in line with what you'd mentioned, Simon. Any further comment on that?
Yes, at the moment they don't see it as an interest-free loan, because it does fall outside the regulation. But I think there's an element of watch it. I think HMRC will look closely at what these are. But actually, going along with Lou, I think there is an element, and we've discussed this before in the past, Nick, there is an element of giving people freedom, more freedom to choose maybe when they're paid. But what does that mean? They'll get paid every day? I doubt it. They may actually choose when they get paid every month to coincide with other bills. And I think that's where I'd like to see pay on demand going. But I think the topic's been hijacked a bit for employee salary advance schemes. Within the SD Worx offering, flexible payment capability has been around in it for about 15 years. So if you want to do ad hoc payments, the capability is there now, but it's from the employer paying wages.
And it's the way it's packaged, right? It's the way that it's packaged. I think you just highlighted there. Good to hear. Just to finish off this subject before we jump into the gender and ethnicity pay gap section, that Anne Henwood has posted. We offer financial advice to all of our employees, and that's echoes what you were saying, Lou, which is a great thing to be doing. So let's move on to the next subject then. I'd like to get the audience involved again. We're going to talk about gender and ethnicity pay gaps. So let's start with a poll. How has the COVID-19 pandemic impacted your ability to report and upload your gender pay gap results? So perhaps it hasn't. We report and upload as normal. We have needed to adjust to take account of CGOS impact, but no other impact. We have appreciated the relaxation of reporting requirements. We don't have to comply with this obligation. Equal, and so on. So we've got that there. So I don't. Once those results come in. While they're coming in, Andy, we spoke very briefly before we started this webinar that you were saying there's been a change, an equal pay change. It's going to have a massive impact on payroll as well. So perhaps as we wait for these poll results to come in, you could just give us a bit of a brief update on what you're reading pre-webinar.
Well, I was just we were just chatting about future topics, and one of those could be the fact, obviously, the Supreme Court made a judgment that it is okay for the tribunals to consider again whether or not the ladies, I believe it was ladies working at who are on the tools compared to the warehouse staff who are mainly men, the tribunal could reconsider whether or not the equal pay is being given. Now, if the tribunal decides in favour of equal pay, as hasn't happened, then obviously the ladies need to be reimbursed that money, which will have an impact on many things, including pension entitlement, etc. So we wait to see what happens from the Supreme Court passing it back to the tribunals to consider again what the outcome is for an equal pay. And it's not just one. There's numerous cases, I believe, in the waitings, a bit like the gig economy. There's lots of stuff going on in the background which could impact payroll. I don't know if Simon might have more of an update as well on that.
There'll be a subject to come back to then, I think. We've just had these results come in. Samantha, what are your thoughts on these results? It says 50% we report and upload as normal, but 19% we don't have to comply with the obligation.
Yeah, no, I think these are. I'm pleased to see that top line 50%. Certainly, you know, last year, as the majority of us working in payroll were kind of struggling under the weight of the pandemic and furlough and the coronavirus job retention scheme, we were very much aware that actually for many, it was almost business as usual. They might be working from home, but actually preparing for the reporting and uploading that's business as usual. That's an everyday occurrence for them, and they were on it. And actually, that last year's exception possibly came too late anyway to have had any real benefit for them. But it's good to see that 19%, and I think it's from this angle that my kind of thoughts were turning. And forgive me, it's the policy head I've got. I'm aware that when gender pay gap reporting first was introduced, of course, it's for employers with 250 employees or more in Wales, Scotland, and England. The obligation is on them. So for smaller employers, there is no obligation to report and upload their results. And so this 19% have probably thought, yeah, okay, don't need to think about gender pay gap reporting. But when gender pay gap reporting was first introduced, the House of Lords carried out a review and published quite a scathing report, particularly on the legal profession, for choosing, particularly for the the partnerships who had chosen not to report their gender pay gaps. But it made a recommendation that actually the Government Equalities Office consider reducing the headcount to 50 employees or more. Now, the response from government was, yeah, thank you very much. We'll take that kind of feedback, but we'll consider it when we carry out the statutory period of review, which I believe was a 3-year period. I may be wrong there, but I think we're now hitting that 3-year period, and so it'll be interesting. Hello, did you lose me?
No, we've still got you loud and clear. Sorry, go on,
Oh,
Samantha.
okay. Sorry, I just suddenly heard Steve there. So yes, so I'm quite keen to consider to think about whether or not government will come back and say, actually, this is working well for these affected employers. Let's see it rolled out a little bit more, and supported by the outcome on this equal pay claim. I would like to emphasise, of course, that gender pay gap reporting is not about equal pay. It has a wider brief, and of course, I'd also be interested to know where we are with ethnicity pay gap reporting, and see what impact that could have on an employer obligation going forward. But this is again a prime example of where payroll and HR or payroll and other parts of the organisation need to work very closely together to ensure that they have accurate information.
Absolutely agree with that. And so, Simon, we were talking pre-webinar about the gender question, because I understand from income tax purposes you can't be gender neutral, but obviously people can change. It's relatively fluid now. You can change gender whenever you decide to. So how does that impact from a payroll reporting perspective?
Yeah, it adds a complication to it, because you're quite right. It's a question we frequently get asked is someone's declared themselves to be gender neutral. Can the payroll accept that? And the answer is no, it can't. You have to declare a gender, male or female, otherwise HMRC will not accept the submission from the employer at all. So there are gender recognition requirements for taxation purposes, although it has relaxed. But you'll find that this year on your P60, and probably last year on your P60, it no longer has a gender on it. It's gone. But 2 years ago, it did have it, but it's still a compulsory field on the RTI submission. So the gender for tax purposes is different to the gender for employment law purposes. And I think under gender equality and the gender pay gap reporting, it's your stated gender that you want to be that is taken into account. So it offers, if I put my cynical hat a little bit, an element of fluidity. I don't know if John or someone like that can comment a bit more on that fact, but there's an element of I can tell my employer I'm a cat if I wish to, but I can't for tax. You're on mute, John.
I think you're got you back now. John, I think you're on mute, John.
Managed to see. There's always one person. There's got to be one person, and this always seems to be me. So I thought I'd better do it before anyone else. Yeah, from an employment law perspective, you're right. There was a fairly recent case concerning someone who was transitioning, worked for Jaguar Land Rover, and I have to say that they were treated pretty poorly within the workplace. There were all sorts of comments that were made. Management didn't deal with things in an appropriate way, and perhaps inevitably in these type of cases there was around toilet facility and which toilet facility should be used. And it was so bad that I think Jaguar went down for an award somewhere in the region of £180,000, which Employment Tribunal is right up there as the most significant. But one of the issues that was resolved in the Jaguar case was really the fluidity point which Simon raises. And there is a broad spectrum, of course, of gender identification. And within that, you can have, of course, people who are intersex, people who are non-binary, and people whose gender identity can change on a weekly basis, or even indeed within the course of a day. And before the Jaguar case, there was some debate as to whether gender identities were rigid and there were a limited number. But I think the general direction of travel is that there is a spectrum of gender identity. And to be quite frank, where you place yourself on that gender spectrum is really a matter for the individual. And of course, from an employment perspective, there used to be, under the Pre-Equality Act law, a need for some form of medical supervision when you were looking at issues of gender identity, and there is none of that anymore. So I think the general direction of travel is all going one way. I think to an extent there's been some recognition of that within government with the decreased cost of the gender recognition certificate, which was I think £140 and is now being changed to £5. So certainly if you're looking at the spectrum, there's a fairly broad spectrum, and people can place themselves, I think, pretty much anywhere on that they would wish to do, and you're not fixed on any particular identity at one point in time. So not only in R35, there are some distinctions between the tax perspective and the employment perspective.
Sure, that makes sense. You put that really clearly, so thank you for that. And Lou, I understand there's some impact on the JRS scheme as well.
Yeah, I mean, the most important thing for today is it's the deadline for submission for your April reporting and submission, and to make sure that you have all your evidence. I know I must sound like a broken record, but I can't reiterate enough how important it is to have the evidence relating to the period, because there have been some changes from the 1st of May, and I suppose what I've been referring to actually, forgive me, is CIPP had put out a flowchart to help me understand and remember the impact to the changes from the 1st of May, and to take those all into consideration, because the period, correct me if I'm wrong, Simon, because you're allowed to look up to and including the 2nd of March 2021 to see if an employee is eligible for CJRS, which is a slight change to the March 20 and the September-October 20. Isn't that correct, Simon?
It sounds good for me, Lou. I'm going to accept your advice there. I guess the big challenge with the furlough is, of course, those that have been on furlough are in effect excluded from, to an extent, or distort the gender pay gap reporting statistics, aren't they? Because the stats from last year are reported this October, and people are still on furlough now, won't be reported until next April. So it's going to be a very strange couple of years.
Ashley Dorman's actually commented, rather than a question, more of a report, just saying that they report on pay gaps for gender plus voluntarily for ethnicity and also sexuality for the past 2 years. Next on the agenda for them is to consider voluntary disclosure of disability gap, but we need to first decide on the definition of disability.
Yeah.
Yes. Well, shall I pick up on the point, Nick? Just in terms of where we're up to, because there was an initial consultation around ethnicity pay gap reporting, which I think it goes back to October 18. And there's a consultation proposed, I think, about 3 months later, and the government has leapt into inaction concerning that, and nothing has really happened since, apart from an indication of Bayes in the middle part of last year that the government was still looking at it. So it hasn't progressed in governmental terms at any speed whatsoever. And just as you'll have issues in terms of disability, there's a live issue in terms of ethnicity as to how you're going to effectively cut it. For example, whether the reporting should be between those who are white and all BME staff, or alternatively a breakdown of particular groups. So you'd anticipate that it's coming. It makes sense for it to be coming in. When it will, in a compulsory sense, I think is stick your finger in the air.
Sure, no, I appreciate that. So let's move on then to our last topic, which is something that I'm seeing lots and lots of questions about in various chat groups on Facebook and other areas, which links to Brexit and employment and the Alabaster ruling as well. It's as a recruiter, as I say, it's a question that I don't fully understand. I see the word Alabaster a lot, and I wouldn't even profess to start to try and explain it. So what I'd probably like to start with is maybe coming to you, Samantha, and just clarify what the Alabaster ruling is, just for those like me who are a little bit in the wilderness?
Yes, yes, no problem. And I put my hand up earlier and confessed to having a personal interest here because my daughter's on maternity pay at the moment, which was until very recently SNP only. So being told that she'd got a pay increase from, or the company had got allocated a 2% pay increase to the workforce from July, my first question was, have you spoken to Payroll about backdating that to your relevant earnings period? And then I went on to explain why I was saying that. Becky obviously has learned to switch off from anything I talk about when I talk about payroll, so she didn't take any notice of me. However, let's have a look. What are we talking about when we talk about Alabaster? Well, we're talking about Mrs. Alabaster, who took up a case against her employer regarding the statutory maternity pay payment that she had received at the point at which she went on maternity pay on maternity leave. Her pay, the statutory maternity pay calculation, the 90%, the higher rate, didn't reflect the fact that she'd had a pay increase since the calculation was carried out. Now, Gillespie, which was an earlier case, had talked about earnings in the relevant period. So it had looked at a pay increase that happened or affected the earnings in the relevant period. Whereas Alabaster went that step further and said, actually, my pay increase didn't happen in the relevant earnings period. It happened later, but now SNP doesn't reflect the pay that I'm on as I start my maternity leave. So I think SNP relevant earnings is wrong. Wherever you sit on that, she went a long way through the courts and appealed and continued to appeal, and the European courts ultimately agreed with her, which is fine to a degree. We can accept that. We had accepted Gillespie. There was a certain amount of common sense. However, what the ruling came out with was, right, okay, if any employee who is on maternity leave, if there is a pay increase that impacts their that is introduced at any point during their maternity leave period, that will impact the earnings in the relevant pay reference period. So that's a long time. Anybody who's aware of their relevant period will know it starts or it ends 15 weeks before the expected week of confinement or date of birth, and it works forward or works back 8 weeks. So we're looking at a heftily long period of time, any time from 23 weeks before baby's due right through to a year, 52 weeks after maternity leave has begun. So that's a long time. So any pay increase, which can include national minimum wage, that has now been confirmed, will affect earnings in the SNP 90% rate. And we wanted to discuss that because it's an important one. Even now, it continues to be discussed and debated. And so we really wanted to kind of raise awareness. I have absolutely no doubt that anyone listening here today will know all about Alabaster. But just in case,
it was a
that's why we wanted to discuss.
Overview. I now feel skilled up, so that's good, Samantha. So let's pick up on that national minimum wage piece then for you, Simon. What's the impact of national minimum wage, especially for those on furlough, in relation to this?
Well, yes. Well, the significance of why national minimum wage is mentioned is because of the significant rise for those aged 23 to 25. So the national living wage now applies to those aged from 23. So in effect, they've had an 8-9% pay rise this year. If they're on maternity leave, does that impact their SNP average earnings calculation? And the implication from the statutory payments consultation group minutes is that national minimum wage raise is a pay rise, and therefore it should be taken into account when calculating the qualifying period. I mean, I've got to say that's a policy legal view. Other lawyers may come up with a different view, but that was the DWP view, their legal advisors, that it does. And then that equally goes, because I'm sure Sam, Lou and I, and maybe some of the others will see on social media the number of questions that are asked about the calculation of average pay, is that generally you don't count furlough, but if they're on variable pay, what do you use? is that if you're returning people to normality and you didn't use normality in the qualifying calculation, you need to. So it's as if they were normal. And so it's just being aware of the implications of the Alabaster. Before, the minimum wage rises have been probably quite modest, but for that 23, 24, 25-year age group, it's been significant. So you may need to go back and recalculate their S&P. But the importance of linking that with Brexit is that people will say that, of course, all these European judgments will now be dropped by the UK government. And so that's what's sort of muted. But the reality is all the European judgments have been enshrined into UK law.
I'm gonna come to both either of the Johns on this in just a moment. Before we get to the impact of Brexit on EU cases, I just want to. We've got a lovely picture there of the Queen's Speech 2021. Who would like to comment on the impact that the Queen's Speech may have on the Alabaster rulings? Lou.
Well, that's just a lovely question, isn't it? I'm not sure that the Queen's Speech had any impact on the Alabaster ruling, but I could be completely wrong on this, completely. I know that she was covering off in her speech, she'd covered off the veterans change that was to be implemented from April 21, but that isn't going to be reported through payroll until April 22. But that doesn't really answer the Alabaster question, so I do apologise.
No, I've got Simon giggling, so maybe I've got that wrong. Simon, fill us in on where we are.
No, I think Lou's question response was absolutely spot on. The Queen's Speech mentioned nothing on employment law. And hence I guess linking it to it is because I think there's a great expectation that single enforcer proposals under the Matthew Taylor report would all be, we've got, I'm trying to think what the word is, exploitation of low paid workers, all those sorts of protections, and we're going to keep up with Europe. And actually the Queen's Speech said nothing.
There we are. There you go. See, this is why we have the experts on the show, because they're in tune. Lou, straight hot off the press, answered it brilliantly. Let's bring it to the Johnsons. So what's the effect of Brexit on EU cases? Are we going to lose Alabaster law as a result of us leaving the EU? I don't know which John would like to tackle that question.
Shall I go? Just before we start the session, to actually go through all the European jurisprudence and the effects of Brexit would take hours and hours and hours. But in summary, I think Simon actually hit the nail on the head there. And the EU Withdrawal Act 2018, it pretty much, as at 11 o'clock on, well, as of 31st December 2020, all European law became crystallised and enshrined into UK law. And so therefore means everything that was in place then is still in place now. Although going forward, it can be the UK can actually introduce new legislation, implement new legislation and have new case laws, and that our appellate courts, that's the Court of Appeal and the Supreme Court, can diverge from European law if it wants to. And there's also a separate little agreement you might have picked up on Brexit, which is the Trade and Cooperation Agreement, and that's basically that in return for us giving sort of tariff quota and trade deal. We agreed that we would not reduce employment law rights below those on the 31st December 2020, and if we do anything which has a material impact on trade or investment, then it sort of triggers that agreement, and there could be some sort of arbitration or rebalancing provisions taken. So basically, we have got autonomy, we can do what we want to do, but as long as it doesn't disrupt what's called the level playing field. And I think the point will be, just my observation is, I think the courts will obviously observe existing European court law. They'll also observe how that develops going forward, because although it's not binding, it will be persuasive. I think initially courts departing from existing European law strikes me as being an appealable point in terms of the other side arguing they shouldn't have.
Yeah, I think from a practical point of view, Nick, I mean, let's face it, if you take a step back, there's an awful lot of UK legislation which derives from Europe. And some of it we've gold-plated. So, for example, the TUPE regulations, we've gold-plated those regulations. And given that it's really going to take some form of positive step to take these things away, then politically it's going to be a difficult ticket to do that, I think, even if the government wanted to, because taking away workers' rights, I'm not sure will be a universally popular manifesto commitment from anyone.
Super. Well, we're going to jump into some hot topics. Before we do, we're going to go on to our last poll of today. And while we run this poll, I'm going to ask a question back to Samantha. But let's start with the poll first. When a pay increase is implemented to your workforce, do you automatically calculate and process any back pay that may be due to women in receipt of SMP? Only recalculate if asked by affected employees. Don't do anything different for women on maternity leave. Or what is Alabaster? So while we're getting those results, Samantha, I've had a question in from Jackie Yang that just says, would it be possible to provide some backup of what you just said in relation to the maternity back pay due to salary increase?
So some sort of confirmation, but as in a kind of link to government guidance on this, because it is covered. Yeah, it is covered on gov.uk. So we have kind of very straightforward guidance on gov.uk, which we can post a link to, and then also the statutory HMRC's statutory payments manual goes into a little bit more detail on the Alabaster calculations, so we can provide a link to that as well. Did I hear you right, Nick? Is that what you said?
Yeah, I think so. It was just reconfirming your initial description of what it was, and if there's any additional information we can give. And just to remind everybody, we will be sending out some additional information post this recording as well, which we can answer your questions and give you some links to as well.
I am delighted to, I was going to say, I'm sorry, I'm going to jump in there, Nick. I am delighted to see that 87% at the very top. And I'm hoping that my daughter's amongst that 4%. But yes, we will post some links either in the chat or on the answer document that I know Steve puts together at the end of this, and then that will take us to further reading. There's also we'll throw in a link there to the actual ruling. So if you have a problem with sleeping at night, that's a nice background read for you. So
we've had quite a nice comment in from Anne Dodd, who just simply says, "I would vote for anyone who got rid of the awful Alabaster laws." Not everyone loves it.
Definitely, me too.
Yeah, very, very common response, that one. Totally perverse. Totally perverse.
Well, I think that leads us nicely into the hot topics. I know there have been a few updates to JRS and things we want to get through. Before we get there, I wonder if we can just jump through some of the questions we haven't been able to reach to yet, if that's okay. One was quite early on in the webinar where Karen Thompson asked, has anyone heard any rumours that the job retention bonus may actually come to fruition? I ask because on the new corporation tax returns, there are boxes now to report JRS, but also any overclaims of the JRB. Does that make sense?
Sort of. I think the answer is we still don't know. So the bonus was suspended and there's been no formal announcement of it being reinstated, although there was some hint of reviewing at a later point. So we may find that the HMRC are just keeping the options open, or they don't know what to do either. So they may have started projects which they've just continued until they know otherwise. We've got to remember we went through this exercise of the new scheme that was going to be launched in October, November sort of time, which was then pulled that weekend of it going live, and the job retention scheme was extended and now extended to September. But I think there's a general view that no, you won't get the bonus. But that's an opinion.
Super. We've had another question in from Catherine O'Neill. So please can I check the tax implications of paying employees a fixed amount to cover working from home costs, e.g. IT desk equipment? Samantha, perhaps you could help me with that question.
Well, yeah, that's a great question. And obviously we are aware from the last budget that there was not the last budget, might have been the one before that. There was an increase to the home working allowance that would attract tax relief from £4 to £6 per week, and that is that can either be paid by the employer free of tax and NICs, or it can be claimed by the employee, and where the employee claims it, there will be an adjustment to their tax code. And last year, HMRC said even if you haven't been working all of the year at home, they will allocate the whole year's worth of allowance to your tax code, and an adjustment that way. Now, that's not to say that an employer couldn't pay a more generous amount, but then we'd need to be seeing evidence. We'd need to be keeping those records, as Lou's emphasised the importance of keeping records and evidencing the reason why those higher amounts were being paid. But we'd have to be careful if we're actually picking up an employee's bill. So if, for example, we picked up an employee's home telephone bill, it's a pecuniary liability and it would be subject to Class 1 NICs in the usual manner. So yes, higher amounts can be claimed and paid, but there needs to be evidence, whereas the £6 can be paid per week or claimed per week without the need to provide evidence.
Super.
Hopefully
and I know,
that answers the question.
It does, and thank you everyone for putting your questions in. I'm going to finish with this question for today. Any we haven't got to, we will cover in a document that will come out after this recording. So thank you for submitting them. Hopefully we've covered most of them during the episode. The last question I'm going to bring to you, Lou, if I may. It says, can you please discuss PENP calculations? I'll admit I don't know what they are, so I'm hoping that I've gone to the right people on this.
That's a Simon.
That's going to get carried forward to next month. That's a biggie.
There we are.
That is
question.
3 minutes.
Yeah,
Okay.
I mean, that is, to me, whenever it comes to PENP, I mean, from a payroller, I would be going back to employment law and for tax to fully understand an employee's contract and what it says, and have that discussion with somebody with that knowledge. As a payroller, I wouldn't be completely comfortable with the law the way it is and with the information. I don't know how Sam and Simon feel. You really need to understand the contract and the periods that are being paid, and you need to take advice to make sure that it's going through the payroll correctly, because it's one of those ones, it's like Alabaster, but even worse really. It's not something that happens every single pay run, so therefore you need to go back into the detail every time it arises, because different employers have different contracts and have different terms and conditions. I don't know, John, if you agree with that or not.
Yes, well, I think PENP is complicated for anyone, whether you're in payroll or an employment lawyer or potentially even a tax lawyer. When you first start looking at it, it's not the easiest thing to apply, and it takes quite a long time to even understand it. It
needs to be noted, it was a simplification, though. It was a simplification.
Like I've opened a big can of worms here that we could talk about, so maybe we'll
that's going to be a next. I think next time. But I was going to say, no, I think that'd be a great one for next time.
Because there have been some changes to the PEM calculation, Nick, recently in relation to foreign service. So, but Lou's quite right, and it's a view that we tend to take here as well, is you're actually starting to talk about regulated activity. So what can your payroll professional actually help you with? Well, actually, I think it's for the termination process to define what is PEM or not, and therefore what's tax and NI free or subject to tax and NI, or what's subject to Class 1A. You could say, well, it's just a calculation and payroll, can you get on with it? But it actually involves giving taxation advice, which is regulated.
I'm conscious of time. I think we've got time for a very, very brief. I'm going to come back to you, Simon, on this one. I know we're going to try and keep it concise before we sign off for today's payroll question time. But some concise JRS updates, if there are any to report back.
Yeah, good luck. Your deadline's today. Get it in for April, otherwise you're too late. And don't be confused on the earnings views. You've got to go back to the original point. So you've now got 3 judgment points for reference salary and usual salary. Look at when they started their employment and were first reported, as it's the earliest point, but still counts. And furlough pay is not subject to national minimum wage, so don't think you have to raise it because you'll be committing fraud. How's that?
There you go. Perfect. Succinct and excellent. Well, listen, of course, if you're on this webinar, please sign up straight away for our next one, which takes place on Friday, the 18th of June. You can register at sdworks.co.uk/PQT. And may I just take this opportunity to give a huge thanks to all of our panel, including our new panelist, John Dorney, today, for their excellent wisdom covering some complex subjects. And I look forward to welcoming all of you and hopefully some others as well. So please share this with your friends and payroll colleagues at the next PQT in June. Thanks, everybody.
Bye.
Bye.
Uh,
Bye-bye.